Okay, welcome to the Swing Trading with Cycles channel. We're going to do a review of the broader markets today. It is October 25th. It's Tuesday night, so we have our Tuesday candle complete. That's important because it tells us, was the Monday move rejected, followed through on, or did we get consolidation? In this case, we did get follow through for the S&P. That's what we're going to be reviewing today. We'll also look at QQQ and IWM if we have a chance. So I am going to look at the futures first. And I'm doing that because we're trading right now, right? Because it's about 10 p.m. and so we've been trading for about 4 hours now. And this is a setup that I use. This lower left-hand corner right here is a daily. And so what I'll call your attention to is, we'll zoom in here. We'll just hit this auto button. And so we've had some pretty bearish earnings after market close. Google and Microsoft did not do so well. And I think Microsoft also gave some pretty poor guidance. Google's up like maybe 6%, maybe it is year over year in revenue, which is one of the slowest paces of growth they've seen in quite some time. And so it is definitely the case that you would expect bearishness tomorrow. You're already seeing that on FinTwit. What do the actual charts say? And what I should say when I say charts, I mean the numbers, because we're talking about price action, right? And so what do the numbers tell us? This is our candle from Monday. What is the range of that candle from Monday, right? That's what we want to know about. That's what our range is. And so right now, all we have is a measly little inside day. We don't have any downside follow through yet. This is your daily chart, mind you. It's very early, but we would need to break below 37.90 on the futures. And we'll talk about what that level is on the S&P. I just wanted to show the actual live trading. We're just consolidating here. Everyone that's screaming, oh, we're going to have a big down day. Maybe we are, but right now, all we're doing is consolidating. And in order to have a big down day, we're going to need to make a low below the previous day's low. And that would also create a swing high. That would make this a swing high. That's what we're going to have to watch for. And just kind of to put a finer point on it, this is your 8-hour chart. So it gives you almost a little bit of a preview. And notice the 8-hour chart actually does have a little swing high, right? This is a swing high because we're below the low of this candle, which marks the high. But what do you see on this? A little wick, right? On this candle. So we're trying to reverse back. And if we look at the hourly candle, that'll give us the detail of what we're looking for, right? And so this dip down here, this like little rally up here is that little wick that you're seeing on the 8-hour chart. Because this is your 8-hour candle that's still working its way, right? I hope you're seeing this. This is the multiple time frame analysis, right? This little move down is what created your swing high on that 8-hour chart. But now we're trying to reverse back up and get back into that range. And so we'll see how things open tomorrow. Now let's look at the actual S&P 500. Let's look at the cycle counts. So we'll go to that. Okay, so today appears to be day 8, and I mention this all the time. Definitely take a look at all the cycles material, and you'll see there's a common thread there. I talk about the fact that the price action is primary, the cycle counts are secondary, right? Cycles, notice this cycle was 54 days, right? This whole thing. But the one before that was 25, and this one appears to have been 27. So you gotta be flexible. You have to watch the price action. Do we have a swing low? Yes. Are we making higher highs? Yes. Are we holding higher lows? Yes. Right? In this case, even if have we crossed above the 10-week moving average, or excuse me, the 10-day moving average? Look at that. It's also curled up. Now we can get a violent reversal again. That can always happen, but you have to pay attention to what is happening now versus trying to predict what's going to happen in the future. At least that's my perspective. So we made a high, came down, did that. Now we're doing this, right? So we can come down again. We could even make a new low on the daily as long as it preserves the uptrend, right? Now this doesn't mean we're going back to new highs, right? And definitely take a look at the various pieces of content. Definitely take a look at the weekly report that I put out on Sunday. They come out. I try to put something out every Sunday where we talk about. We're probably in a new weekly cycle. I'll put a link in the description. But this is something and I'm not saying we get to this level by any means. That was Like, let's not get too excited. But the point is, we're making higher lows right now, right? Like, this is a higher low, that's a higher low. Now, do we make another higher low and then another higher high? This is a higher high above here. That's what this line is. We knew we needed to contend with that 3806 level. We've been watching that on previous videos, and we just blasted through it. So what do you think a significant level is going to be tomorrow? The 3806 level. And I say level, but what I really mean is zone. As a reminder, you can't expect it to come down, down to the dollar or a penny, but definitely you could see a pullback to the low 3800s, which is kind of what the futures are doing. I mean, they haven't pulled all the way back to there, but they're pulling back with that inside day, and then a move up. You're going to want to watch the lower time frames for your signals. But if this is day 8 of a new daily cycle, if it's also a new weekly cycle, as we suspect, then we would expect this to be a right translated daily cycle. Doesn't mean it's going to be a right translated weekly cycle, but you would generally expect the first daily cycle of a weekly cycle to be right translated. And again, if that stuff doesn't make sense to you, right translated, definitely take a look at the Cycles 101 content. That's a very important concept. And so if we go to that weekly chart, this is week 2 of a new weekly cycle. And again, this weekly cycle could still be left translated, right? Like this one. This was a weekly cycle where we went up for 5 weeks and then we dropped for 11 weeks. That's what left translated is, right? Where we dropped for longer than we rose, right? This is a right translated cycle. We rose for 26 weeks and we only dropped for 5 weeks because the low came on week 31. And so we could rally for even another few weeks and this could still be left translated. If you look at this chart, that is a really important level, that 4100, because that is where we formed the swing high that started this trend leg lower. This was actually a bearish outside candle. And so that would be your that would be your level where you'd want to be really cautious if we got up there, where it's like, okay, I probably want to take some profits here, protect my gains if I've been lucky enough to kind of ride this rally. Not to say that we get all the way up there even, to be clear. So again, week 2, and also notice we closed below the 200-week moving average, and then we've kind of rocketed up. That does not mean this is the low necessarily, but again, definitely good for a bounce that could last a few weeks, as I talked about in the weekly report. It wouldn't be crazy to see a rally for like 9 weeks, right? So maybe we rally for another 7 weeks after this. Wouldn't be a shock. Now, we do have the FOMC meeting next week, and then we have the jobs report after, so we'll have to see how those play out. But that wouldn't be out of the question. Most importantly, the monthly chart. We are setting ourselves up for a bullish outside monthly candle. Now, we only have 4 days left to trade in the month, so we don't have a lot of time to make that happen. We would need to get up to 41.26 to make that happen, and that's almost certainly not going to happen in the next 4 days. But what we could end up with is a compound outside candle where the November candle opens like somewhere like right here, and then we make that move. So everything is pointing towards a potential test of the 4100 area. Not to say we're heading up there in a straight line, but there is rationale for getting up there, even if it is going to be a lower high, which I suspect it may be. But that, again, gives you something to trade against. In the broader context, this is month 31 of the 3-year cycle, which is, would be approximately 36 months. So we wouldn't be surprised to see another 4 or 5, maybe even 6 months of downside. Also entirely possible for us to bottom here, right? We've been falling for almost 10 months, right? It could be, right? We can't. People love to declare this is a top or this is a bottom, this is a bear market rally. At the end of the day, we just have to wait for more data. What you can say right now is the dips are being bought. We are holding higher lows on the daily chart. So you could be long here with the right stops, obviously, with the right risk tolerance. So that's the picture for the S&P. Let's flip over to the Qs, and we'll stay on the monthly chart just to kind of get the big picture. And it's the same idea here. Month 31 is setting up for a bullish outside month. Again, not enough time for that to happen. So if it's going to happen, it'll probably happen in November, and we'll kind of close the deal, or at least try to test that level. And for the Qs, that's 311. We're down here at 284, so that's a good upside, like $26. At least another in the neighborhood of 10%. And if we go to IWM, so IWM again, it's all the same pattern for these guys. And IWM, the monthly high from September would be 189.86. And so again, probably not enough time left. I mean, in this case, that's actually not that much higher. We could see a world where we do close this out as a bullish outside candle. But again, this is a pretty protracted downtrend, and we're going to need to see a higher high on the monthly chart before we have a reason to believe that it's ended. And we'll stay on IWM. We'll go down to the daily chart. Same picture as the other indices. We've made a higher high, right? Notice we've made a higher high above that area. It's day 8 after what looks like a day 27 daily cycle low. That's after this really left translated daily cycle, because remember, and this is all the indices, we topped out on day 4, and then we had this gap down from the CPI print. So will be interesting. And of course, we're going to have another CPI print in November. That's going to be one to watch. And on the weekly chart, same kind of idea. Week 2, this definitely has the look of a bear flag. I don't love the look of that, but I also don't like to trade off of the way things quote unquote look. That said, there's something to be said for just being a little bit cautious when something does present itself like a bearish appearance. To me, that's just kind of respecting risk. And here we haven't kind of broken out against this cluster, right? Like this cluster of highs here, you can see 3 days we couldn't get through that. And so you'd really want to kind of break above 284 more decisively. We're kind of sitting right on it right now, and obviously we're going to pull back hard tomorrow. I'm not saying the rally is over, but given the Microsoft and Google numbers, and they're obviously a big part of the Qs, you can imagine we're going to get some pullback. The question is it going to be viable? Is it going to hold a higher low, as we talked about? That's an important concept. Get a sense, drill down to the lower time frames, get a sense of where your higher lows might exist. And as we stay on the daily chart, let's think about what day the next CPI print will come. So it's usually November 11th. It's usually like the 11th or the 12th of the month. So, right. So by the time the CPI comes, we'll be on day 21, 22 in that neighborhood. That's definitely the timing band for a daily cycle high. So you could see a world where we actually continue to rally, certainly not in a straight line, but potentially making higher lows, maybe consolidate for a few days. Maybe we make, a final high on that day of the CPI print, and then that begins our move down into a daily cycle low. Obviously, we have the Fed meeting next week. We can imagine that's going to be a big catalyst. But again, this is why I don't try to predict where the market is going. I really focus on the price action. But that's still a good lay of the land there. Definitely a short-term rally. And I'll flip over to Dixie really quickly because I won't have time to make a separate video today. We are on day 16 of the daily cycle. It just opened today. And it does look like we're putting in a weekly cycle decline here, right? We've got another, especially if we can close the week below that. I mean, I hope you can see that, right? Like this cluster of lows kind of held, and now we're decisively below it. We still have 3 days left to trade in the week, so that could change. We're kind of sitting on the 10-week moving average here, but this is definitely setting up a potential sort of, more like the kind of the weekly cycle decline that you would expect, right? Where we break below the 10-week moving average, and it's just a little bit more protracted than these really shallow ones have been. I mean, we'll see what we get. So that's the lay of the land. Definitely will be interesting to see the price action tomorrow with those bearish earnings, but ultimately, what your levels are. And I'll go back to SPX just to make sure we talked about that. That level, I mean, you can pull up hopefully you can pull up a trading view chart. You can see the low for the S&P was 37.99. So those levels aren't the same as the futures. So that's important to kind of know about. But again, we could break below that low and then spring back up, a false breakdown. That's important to know. That's you can see that's what we did here, right? We made a low below here, and then we made another low below here, and then boom. So you want to be careful of that too.